Hello everybody, Tim Knight here, back where I'm normally at, and feeling very uninspired right now, I've got to say, because we've got the looming elections on Tuesday, and I guess the reaction from that on Wednesday, and the CPI on Thursday morning, and of course the scar tissue from October 13 is still very much there, so just kind of waiting in the wings at this point. But I at least wanted to go through with a new post with some up-to-date index charts and just share a few thoughts about those, because nowhere is it written that the market's going to fall, and nowhere is it written that the market's going to rise. The market wants to go up because human nature, it tends to be bullish, and all sorts of reasons have been trotted out, seasonality, gridlock in government, all the bad news is baked in, et cetera, et cetera. But let's just look at some key charts here and say a few things about them. We start off with the Dow Jones Composite, which is still sporting a very handsome topping pattern, albeit pretty choppy. And I would say the two key barriers to upside, the two key things to watch would be these two lines right here. This one is quite close. This is at 10,724.61, and the more serious breach should be up here with this island gap reversal. And God help us, but the worst one of all would be way up here, which is kind of the all-encompassing descending trend line. On the flip side, the ideal, of course, for the bears would be a resumption of weakness, which, if we can get way ahead of ourselves, at some point taking out that low from that dreadful, dreadful day, October 13, 2022. As it is now, we're pretty much sky high at this point, and I think there's people consider it a foregone conclusion, and I said this like a year ago, that the GOP was going to run roughshod over the Democrats, and that would get stocks all excited. I'm not going to look at every single index. I'm just kind of hitting the majors here. Here's the Dow Industrial. I've done a sort of kind of good channel on this one. It's not perfect. The top line tends to guide prices much, much better than the bottom. You can see right here a quartet of rather close either touches or approaches. We are clearly on the high side of this channel right now. And as before, the key is to be contained and not to exceed that trend line. The NASDAQ 100 has a couple of pretty clear items. The support is way down here, so it could actually fall a lot and not break the support. That's a major, major, major supporting trend line right there. So that would be, if we did get weakness, that'd be extraordinarily strong support. If we got strength, the key in this instance would be pretty much not to exceed the highs that we saw back on October 25. Russell 2000, anything worth saying? That it's so messy. We're kind of in a no man's land now. It's right near the middle of this huge range, so it's just really nothing to say. The stock still looks pretty bearish. As with the item that we kicked off with, the composite, we've got two lines here which I think constitute important barriers, and they too are based on gaps. This one here on the 2502.90, and then the more serious one would be up at 2701.52. Some pretty wide ranges there, and major, major support way down here. Now the S&P 500, of course, is hyper important, and the Fibonacci's have been ruling the roost here. We've got two retracements drawn. One of them, and don't let the multitude of colors fool you, these are two and only two retracements. They're both anchored to the lifetime high, and one of them has a low based on the financial crisis low, and the other has a low based on the COVID low. And it just so happens that there is a duet of retracements right here, which, surprise, surprise, is exactly where we're banging around. And that to me has tremendous magnetic pull. That's why we're just clinging to, I mean, look at that. Just that is like Star Trek tractor beam times 10 in terms of power. The bears only get a real opportunity if we break last Thursday's low right there. The bears are in huge trouble. Should we exceed this 39.11 peak, that would really probably wreck the rest of the year for the poor bears. So as you can see, there ain't much to go on. That's a pretty tight range in terms of deciding victory or defeat, which is why I'm feeling so like blah right now about the whole thing. But yeah, this is a very important juncture that we're at. I made mention earlier about utilities. I thought we were in an interesting position for weakness on utilities. So I've got puts on the XLU, and those worked out pretty good so far. I also want to mention on the VIX that we've got, this has had the stuffing beaten out of it. We haven't been beaten to absolute smithereens here. This is the supporting trend line, which tagged here and tagged here. This, of course, was after that grueling 2-month rally. So it could still go farther down, but at least, we're not in the mid 30s anymore. We're down in the mid 20s, and we could get as low as, 21, something along those lines. But long term, it could still set up to be a powerful rally above this if, God willing, this base completes. That would be absolutely extraordinary. What else is cooking? Any other graphs worth talking about? Just kind of thumbing through here. This one's not terrible. This is the major market index, XMI. Kind of a sloppy division here, but you can see the overhead supply here and the failures here. Most recently, we double bottomed down here. Of course, October 13 being this bottom. And the XOI, I'm just less and less interested in energy. I think I'm down to just one energy related put, which is Murphy oil. It is just so dang strong. Biden has bungled energy so badly that the oil companies are just having an absolute field day, and I don't see anything holding them back at this point. So anyway, it's going to be kind of wait and see. Tuesday and Wednesday, Tuesday especially Tuesday could be a complete sit on our hands, nothing happening type day. And I imagine by Thursday morning, things will be rocking and rolling again. If it rolls over us or not remains to be seen. But I'm not feeling super confident. I don't feel very safe about this whole thing, and who knows what that means. But I've got 30 positions at the moment. They're all got lots of time. January 20th is the earliest expiration. I've got some out to April. My average expiration date is 104 days out, I think. So lots and lots of time while I wring my hands again about the next, 3 days, for goodness sake. So I'll end it at that. If this hasn't been helpful, at least maybe it's been a little bit comforting. This is going to be a big week. It could really define the rest of 2022. So thanks.